Hey, this is Justin with DayTradeTheMarkets.com and DailyMarketAssistant.com. And in today's video, I wanted to look at the E-mini S&P and talk about what we call confluence trading. Talk about what that is, and then show four, there are more than four, but just show four really good examples from today. We had a nice rally in the E-mini S&P today, so I just wanted to show those four good examples from that as well and talk about what confluence trading is. So to give you an idea, a little bit better idea of what confluence trading is, we start with what we call our building blocks or our pieces of evidence. And the idea here is that we have various pieces of evidence, both bigger picture, bias and key levels, and then the real-time data, especially these relative aggression bars, but also high velocity moves and support resistance, deceleration, divergence, and filter. And the idea is that each of these is a piece of evidence or a piece of a puzzle, and the more that come together, so if you have 1, 2, 3, 4 of these that come together at the same time, you have a better edge. You have a higher degree of probability that the decision you're making makes good sense. Does that mean it's going to work 100% of the time? Of course not. That's impossible. Nothing does. But the idea here is that if you are trading blindly, maybe it's a 50-50, each piece of evidence that you can add, it's going to add a few percentage points to that probability so that you can have, when things really line up, you have an 85% chance of success on a trade. When things aren't in your favor, then you know to stay away. So that's the idea here. And just to give a little bit more detail on what these relative aggression bars are, this is really the kind of the crux of what we look at, our first building block, if you will. And what these are is these are real-time bars that are telling you what's going on under the surface of the market, which side, buyers or sellers, is more aggressive at a moment in time, looking at the order flow, the velocity, the volume, the range, and certain other factors as well. So we're looking in relative terms, when are buyers really coming in hard, when are sellers really coming in hard, and not just based on price action, not just based on volume, but actual order flow information, under the surface aggression information, so that we know if strong buying or selling is coming in or extreme buying or selling is coming in. And we know that if the market has follow through or has rejection, it's a very good roadmap to the likely short-term direction of the market. So there's other videos on the site that explain this in a lot more detail, but that's the basic gist of it. So if we go to today's trading, heading into the day, and we talk about like I was talking about when we talk about heading into the day, we look at the bigger picture bias and bigger picture key levels with that. One way you can do that is through this new site that we have as well that you can take a free trial on, called Daily Market Assistant. It's at DailyMarketAssistant.com. You can take a free trial. It's a very nice service that you can use. But heading into the day with that information, our bigger picture bias was up. Okay, so all things equal, especially as a day trader, you would be looking to be long with this market. Okay, so that's one piece of the puzzle telling us we'd rather be long. Now, as it turns out, this filter, it started the day as strongly bullish. This is our intraday, our path of least resistance filter intraday. This was strongly bullish the whole day as well. So that's telling us, okay, that's confirming that bulls are still in control in the short term. Now, you can see these lines I've drawn are just some of the bigger picture key levels that we wanted to watch heading into the day as well. Okay, so again, heading into the day, all things equal, we'd rather be on the long side. Our filter is there, so it's giving us pieces of evidence. And you can see early on, we get through this first level with a level 2 or strong buying aggression bar and come back and test this level after we tested the next level higher. Then we bust through it, come back and reject off of a little bit of selling that comes in. And then we have our first, what we call level 3, or extreme buying aggression bar. So that's telling us, well, what we want to see there is, can we either get follow through or can the low of this level 3 bar hold? That's our first expectation, is that the low of these level 3 bars is going to hold. So this is what I was talking about with confluence. This is our first really good example right in this zone here. So let's look at what we have. We have one piece of evidence, bigger picture bias. Two pieces of evidence, the filter. The third piece is the intraday structure with this level 3 buying aggression bar. The fourth piece of evidence, and knowing that this should retrace to the low of this bar and it should act as support, because that's where some really extreme buying came into the market. So theoretically, if that's retested, the buyers should hold that territory, if you will. Okay, so we know the low of that's a good location. We also have this level at 1802, bigger picture level to play off of. So we've got four really nice pieces of evidence all coming together or forming what we call confluence right in this area here. Does it, are these trades, when you get nice confluence, are they always going to, go to the tick and then rally 15 points. No, that's not always going to happen, but it's giving you very good odds that you're into a good trade, and it's a low risk situation. You only needed to risk 3, 4, 5 ticks in this situation to see if you were wrong, and you've got a lot of upside ahead of you. Okay, so that's one nice situation. The second one, this is the one I really liked, is where we break through this level here at 180550, and we do so on this high velocity move and these 2 level 3 bars. Okay, so there was a lot to me that was coming together at this point where, first of all, whenever you have 2 level 3 bars in a row where they kind of overlap right here, I call that the sweet spot. You've also got this level at 0550. You've also got the high of the day that we're retesting. So right in this area, to me, was a great location to be looking to get long. Now, the market, unfortunately, I guess you could say unfortunately, for that trade setup, did not come back to 1805.50-ish, okay, or 1805 in this area. But that would have been just a beautiful Confluence type of a setup. So missed opportunity there. Another way you can play that, though, is anytime you have a bigger picture up bias and you get a level 3 bar on the high of the day, you can simply just go with that on what we call a breakout trade. So that's, if you're a little bit more aggressive, you can do it that way. Okay, so that was kind of opportunity 2. Here was 1. Here was 2. That didn't really come to fruition. The third one, this is kind of what we would call more of a mini battle type of a trade, where you have this level right within this. These are 2 bars right in a row that have the exact same range. We have a level 3 buying bar and a level 3 selling bar. So what we're seeing is that there's a big battle going on. Someone's going to win this battle, someone's going to lose this battle. So let's kind of wait and see what happens and probably go with that in this. And obviously our ideal situation, because our bias is up, is we'd like to see the bulls win this battle, and that's who's been showing to be in control so far. So we've got this, like I say, mini battle type of an idea where we've got a level 3 buying bar and level 3 selling bar competing with each other. It's showing us some strong selling is coming in after some strong buying came in. Let's see which side wins. You can see that we had then some follow through above. So right at the high of this certainly is a really nice idea for whether you're getting in here or getting in here, is a really nice rejection type of a trade in that sense, along with the bigger picture bias. So a lot of evidence coming together. We've got structure. The bulls won this battle. We've got the filter. We've got the bigger picture bias. We've got bulls in control early in the day. Sellers have been rejected. Buyers have had follow through. So a lot going for us in this situation. Okay, that's a third really nice situation. The fourth one, which is probably the most pure Confluence type of a trade, is right in this area here, because this had basically everything you could possibly want going for it. So again, here's what happened. We made new highs. We got through this 1812 area. We did so on some level 3 buying. We know that the low of these buying waves should act as support. Okay, we have our bigger picture biases up. We have our filter is green. We have this green support zone right in here. We even have a deceleration right there. So you've got literally everything coming together at this spot right here. Okay, so does that mean it's always going to rally 7 points? No, but it's telling you have a very low risk, very high probability type of a trade setup. Okay, so then again, so that's, to me, these are what we call Confluence setups. These are what we call this is a situation where a lot of pieces of evidence are coming together, so that if you have the patience, if you have the discipline to wait for those situations, it's not going to be perfect every day, but you're going to have very high edge, high probability trading situations. Whether you're just looking at this as a standalone or you're using this as more of a decision aid with the method you're already using, that's really the key. You're just using this to help you make better decisions throughout your trading day. So that's the idea of Confluence trading. I thought this was an interesting day. Let us know if you have any questions on that, and we'd be certainly happy to answer any other questions you may have. And we'll look forward to speaking with you shortly. Talk to you soon.